Hey there, Vinny from Project Frugal. Another couple of weeks, another investment into Denise's portfolio. Let's check it out. This is Road to 100k. And before we get into the portfolio itself, a big thank you and a big g'day from New Zealand to Australia to Accountable Dave, who told me a couple of nights ago that he loves these videos. So this is for you, Accountable Dave. Hope you enjoy this one. Here we go. The balance is now $35,663.95. So not a great jump since last time, and there's a reason behind that. And the reason is the share price dropped a couple of days ago. Otherwise, it was looking a lot rosier. More incompetence by the New Zealand government, but we won't mention any names or any other things around that. Good balance there. It's moving up at least. Maybe not as fast as we'd like it to move up, but it's still moving up. So let's see what Denise has bought. And she's bought Turners Automotive Group. And the reason behind that is because it's going ex-dividend. We'll get a little bit more than we got last year. Let's go and have a look at the portfolio here. And we've also got a new button here. It's called Analyst. Well, it's not a button. It's actually a field. Analyst Recommendation. Now, this is going to give me some sort of indication of what the analysts are doing. There's also a recommendation column here. Bit of a combo of both of them. I can sort of figure out what is doing well and what the analysts recommend. In this case, they're saying buy, and hold for most of them. If we go and have a look at Turners, well, Turners, fortunately, was a buy. And the lowest this number, the lower the number here, we got a 2.0 for buy for Turners. If it gets down to a 1, it's a strong buy. So a 5 being sell, a 1 being strong buy. And the good news is with these particular stocks that are showing up, we've got a reasonable indication of what we should be buying along with what the analysts recommend. So as you can see here, Turners Automotive Group, and at this stage there'll be $37.55 getting paid out in January, which is up from $23 odd last year. What else can we show you here? Well, we've got a few stocks that are going to pay out in December, and in fact we've got $232.51 at the moment. There is a little bit of a difference here with Stride, which actually pays out twice, but my particular application will only list the lowest of these payouts. Essentially there's two payouts, one after the other, so we might get maybe $28 all up from Stride. We'll see how that pans out. The portfolio, unfortunately, has gone under $4,000 yet again. But, yeah. I was hoping it was going to do a lot better than that, but it is not. So we'll just have to play the long game, the waiting game, the slow, methodical marathon instead of the sprint. Moving on to the dividends. Last video, I said we were going to have over $1,500 for the 2022 financial year. And this appears to be the case, with another at least $232 going on to this balance here. Should get it up to just a tad over $1,500 for the calendar year, which is pretty good. And let's go and have a look at the charts. Yep, well, the week's been average. The fortnight has been up, which is good. The month has been up. It's looking like a good uptrend at the moment in the last 6 months, which is good. Because you can see here at the start of 2022, when the market was peaking and everything went south until roughly around July, and then a bit of false hope there with the market going back up, and then it plummeted again, and now it's on the way back up. So it's a matter of time. It's just a matter of holding. Once it gets up to this mark here on the New Zealand Stock Exchange of around, well, that's probably about $12,800. 12,800 points, then essentially all the losses that have been incurred this year will be back to where they were. And hopefully the stock market will push on from there. We'll do a little bit more digging into Turners Automotive Group, which is currently a buy. It's consumer cyclical. It's a tough word to say, I tell you. Auto and truck dealerships. So Turners, generally speaking, they sell cars and trucks on the second-hand market, and yeah, pretty good. So, well, actually, we have lost money on this, $254. So if you want to be a gung-ho investor like myself, then you can rely on my stock picks or our stock picks, and you can be guaranteed to lose money by the looks of things. Anyway, it's not going to last forever. This will go up, and we will be getting at least $37.55 of that money out. And like I say, according to the analysts, the price target is 22.35% undervalued. So if we were to, well, we've got almost $3,000 in that particular stock. If we were to add 22.35% on that, how much is that? That's lots. That's how much it is. It's lots. It's about $600, roughly, something like that. So that negates the loss completely if it goes back to square one, with the price being where it was roughly when we purchased these on average at $3.97 a share. Currently, the price is $3.49 a share. So we can see here we've got some historical and upcoming dividends. Payment date 26th of January. It's a pretty consistent payer there, and it's once every 3 months, which is one good thing about this particular stock. You're going to get paid every 3 months, regardless of whether the stock price goes up or down. You'll get paid every 3 months because they pretty much always pay. And we can see some of the payments here. We can also track the actual stock. Well, it has actually been going down since January, and it has really recovered there. So is this a good pick? Well, I think it is a good pick. So anyway, that's what we've got for that one. We're going to have a little bit of a gander at the share allocation, because last time we had over 50% of financial services, and now we've got 49.99%, so we're finally under. So we'll be putting some more money into all these other categories except for financial services to bolster them up and reduce the exposure to financial services, so the portfolio is more diversified, because clearly hasn't been a good year for financial services in 2022. Another good thing about making your own application is you can track any data that you want, and here we've got all the transactions since this portfolio's been up and running. I can scroll down through that. It doesn't actually go back that far, back to the 22nd of April 2021, with the first purchase of a $5 stock, CDO Investments Limited, which was later sold. Well, when was that? A few weeks down the track, we got rid of it because we didn't actually want that stock for this particular portfolio. But it's essentially just been buying, collecting dividends, buying, and it's still over $4,000 down. We just keep buying, we just keep getting dividends, and we just keep growing the portfolio regardless. Pumping some more money in, eventually getting some more dividends, more and more, and reinvesting the dividends to buy even more stocks. That's all we need to show in this particular video. Hope you enjoyed it. Hope you learned something. Don't forget to like and subscribe. Leave a comment down below. Let me know what you're investing in, and we'll catch you later.